Seoul's Kospi crashed 10.8% today and tripped a circuit breaker. China's memory ambitions just became a market event. 4 more stories moving the AI tape. Let's get into it. Seoul's benchmark index fell 732 points to close at 6,366, down 10%, its worst session since March. The Korea exchange halted all trading for 20 minutes when the index broke 8% below the prior close, the 8th circuit breaker of Tuesday. Samsung Electronics fell 14.4%, its largest single-day drop since October 2008. SK Hynix fell 5%, pushing its American depository receipts below their U.S. offering price. Those two names carry more than half the index's weight, so this was not a broad sell-off. It was a referendum on memory, and it spread instantly. Nasdaq 100 futures fell nearly 1%, while Dow futures rose 0.6, a clean rotation out of AI hardware into everything else. The bear case is that this is not an overshoot. 3 triggers converged in 48 hours, and if Chinese capacity is real, Korea's margin story is structurally impaired. The signal: if Samsung and SK Hynix fail to bid on Wednesday's open, this is repositioning, not panic. ChangXin Memory Technologies closed its first Shanghai STAR Market session at 49 yuan, up 465.82% from its 8.66 yuan offer price. That lifts its market cap to 3.28 trillion yuan, roughly $4 billion, enough to pass Intel in market value and dethrone ICBC as the top-weighted company on China's A-share market on day 1. It raised $8 billion, the largest Asian listing of 2026. That valuation is the market's way of saying Beijing will fund a genuine third force in DRAM. SemiAnalysis estimates CXMT capacity could reach 350,000 wafer starts a month by the end of this year, only modestly below Micron's estimated 350,000. That number is why Seoul broke. The bear case: 8% of CXMT's revenue is commodity DRAM, with no HBM presence at all, at least a full generation behind in AI memory. The signal to watch is HBM sampling. Until CXMT announces it, Korea's exposure is DRAM pricing, not share loss. A state-backed consortium of Shanghai Yuliangsheng, SiCarrier, and Huawei has begun mass-producing immersion DUV lithography systems, with the first unit slated to reach SMIC, Hua Hong, and CXMT this year. ASML fell 6.6% on the report, its lowest level since June. This is the most strategically loaded item of the week because lithography is the choke point that made export controls work in the first place. It is also the missing piece behind the CXMT valuation we just discussed. Capacity needs tools, and Beijing is now claiming it can build its own. The bear case for the China bulls is large. The consortium targets roughly 5 machines in 2026 and 20 in 2027, against the hundreds ASML ships annually. These are immersion DUV, not EUV, the previous generation. And some critical components are still imported from Japan. The signal: watch ASML'S next bookings print. If China orders hold up, this breakthrough is a headline, not a substitution. Bloomberg's tally of roughly $6 billion in NVIDIA customer-linked commitments reignited circular financing fears, and the market delivered its verdict. NVIDIA closed Monday at $196.51, down 4.99%, shedding roughly $250 billion of market value in a single session. More than $1 trillion was erased across U.S. stocks, with over half of it concentrated in 6 memory-related names, about $8 billion from those 6 alone. Jim Cramer publicly compared the vendor financing structure to the arrangements that detonated telecom equipment in the dot-com bust. A separate SK Group arrangement commits the two companies to more than $300 billion in mutual business. The bear case is structural. When the seller finances the buyer, backlog stops being an independent demand signal. The counterpoint is that the OpenAI backstop is a guarantee, not cash out the door. The signal lands Wednesday. If Microsoft and Meta soften their depreciation and useful life language, the skeptics own the narrative. Safe Superintelligence and NVIDIA announced a long-term strategic partnership on July 27th, pairing a reported $5 billion investment with priority access to NVIDIA's Vera Rubin platform. SSI says the combination lets it scale compute by an order of magnitude, and the two will co-develop future NVIDIA platforms using SSI's research. Ilya Sutskever's lab was founded in 2024 and has no product, no revenue, and no distraction, which is precisely what NVIDIA is buying optionality on. Priority allocation on Vera Rubin is itself a scarce asset, and the structure mirrors NVIDIA's other lab investments, capital plus preferential silicon in exchange for design feedback and lock-in. The bear case is that this is one more line in the $750 billion deal book that just cost NVIDIA $250 billion in market cap, capital out, silicon committed, nothing coming back. The signal, every additional capital for allocation deal, widens the circularity critique rather than answering it. One through line today. Every choke point the AI trade was built on, Korean memory, Dutch lithography, NVIDIA's balance sheet, got questioned inside 48 hours. Wednesday brings the Fed, Microsoft, and Meta into that tape. Subscribe so you're positioned before the print. This has been the Daily Alpha.